national championship is in the balance. 13 seconds left. Florida leads it by 2.
Uzan gotta go.
Uzan, give it up. Cryer, 6 seconds, 5 seconds, Sharp.
He walked, he can't touch it.
He can't, 1 second, and it's over. Florida is back on top of the college basketball world. Championship madness. It's a great day to be a Gator. They win the national title.
Hey guys, what's going on? It's your big dreamer and doer G Dinero with another episode of TA Tuesday. But first, how about them Florida Gators, baby? It's great to be a Florida Gator. Said it's great to be a Florida Gator. National championship in basketball. Remember, none of this is financial, tax, legal investment advice. Just your boy G Dinero helping you understand what's going on in the world of charts and understanding options as well. So with no further ado, let's jump right in. All right, so first of all, we're going to go ahead and start with the daily chart on Bitcoin. And as we have before, a week ago, right about there, that was 1 week ago, we were dancing with the 200-day moving average, trying to break back above it. We did wick above it and immediately got rejected off of it and broke down. You can see here we broke down into this area where there's very little volume that has exchanged hands with Bitcoin. And that area, it basically extends from up here on the upper side of about 81,000 down to the low side of about 70,000. You can see in here, very little volume transpired with the exception of at about $76,000. There is a pocket of volume right there. Otherwise, there's what we would call a relative air gap in this region here. Again, with this exception of about $75,000, $76,000. We did break down to the 1 year simple moving average, the 1 year simple moving average. That's what this cream colored line is right here. It's currently sitting around $76,000. So that did act as a bit of support, I would say, as well as the 61.8% fib level, which you're going to see a little bit better here on the 4-hour chart. So on the 4-hour chart, you can see the 61.8% fib level down here. We started to get that ghost. We call it like a ghost confluence buy flag. We were significantly mean reverted to the downside. You can see that as evidenced by over 2 standard deviations to the downside on the mean reversion model. I put this line in to show where we were last Tuesday, how we were battling with the 200-day moving average in the upper part of this downward sloping linear regression channel that we've been in since January. We're now battling with the midpoint of it. We dropped down to the bottom half of it, rejected off of the 61.8% fib level, which is awesome. Strong support down there at 73.5 and sprung back up into the middle part of this range. So we're now dancing with the midline of this range. Mean reversion went from 2 standard deviations down to 1 standard deviation, mean reverted. And let's take a look at what this actual value was on the RSI. The RSI was 19.67 on Monday, just yesterday, 19.67. That's considerably oversold at that point. Big reaction in the markets and dip to the downside. So what are we looking at as support? 73.5 as the current level of support, next level to the downside, 76,000. Remember, a big pocket of volume there. So pretty much where we're sitting, about $4,000 below where we're sitting is the first level of support right now. We're sitting at around 80,000 at the time I made this. And the next level down is this 73.5 is a very, very strong level of support. Resistance on the way up is going to be around 85,000 to break out back above this channel that we've been trading in, as well as the 200-day moving average, which is currently just under $87,000, and the 50-day, which is at $86,000. Yes, we had a what's called death cross, where the 50-day moving average, crossed down below the 200-day moving average, but that's a lagging indicator. Oftentimes, you'll see that happen after the fact, by that point, we've already bottomed and we're getting ready to start trending back up again. That happens in most cases. So I don't put a lot of credence behind that. What I do put credence in is that 86, 87 will be some resistance for sure on the way back up. Then we have to break the 78.6% fib level, which is at just over 89,000. And then the next level up would be that 91,500. I did throw the Solana Bitcoin chart in here this week. This is a daily chart. The yellow line is where we were last week. And we did break down below the 38.2% fib level, the 38.2% fib level, which is right around 0.00148. We'll call it 0.0015. We had been sitting on that level. It was strong support back here in November, December of 2023. And we're actually revisiting those levels again right now in March and April of 2024. And we actually, 2025, excuse me, we actually broke down as low as 0.00128, 00128. That's low, especially considering we were up at 0031 just March a year ago. We topped out at 0.0031. Historically, this has been as high as 0.0046. That's the all-time high. Right now, we're at 0.00138. So a double from here would take us back up to this level that we were at before of 2.6, 2.7. And that's a significant level of resistance. You can see how many times we've rejected off of that same level. What that means in English is it takes 0.00138 Bitcoin for every one Solana right now. If you were to reverse that, just so I don't have to do the math, let me take a look at my, it's 722 Solana per Bitcoin right now. 722 Solana per Bitcoin. So when it's like that, when it's considerably oversold, Solana is versus Bitcoin, you're looking at moving down here from Bitcoin into Solana, and at the top from Solana into Bitcoin, just generally speaking. So if you believe we are bottoming, good time to move from Bitcoin into Solana. If you believe that we are topping out when we get back up into this range, good time to move from Solana back into Bitcoin. I personally have been a buyer of Solana more so than Bitcoin because I think Solana will run and catch back up on this chart and outperform Bitcoin at least 2-1 for the remainder of this bull run, in my opinion. That's my opinion. Again, none of the financial advice, just what I'm doing. So let's take a look at Solana real quick on the daily chart. Solana on the daily chart, you can see the point of control that we were talking about before is right in here, right around 144, 145. So that will present a strong area of resistance on the way up. Call it between 145 and 150. That area has a lot of volume. But you'll also note there was a boatload of volume all the way down to 125. And we've since dropped below that. Not quite as much volume. We did catch on this shelf down here around 98 to 102. So we'll call that 100. There was definitely some volume. It's hard to see. It's kind of faint down in there, but you can see that volume that I just outlined. So levels of support on the way down. The last one is 23.6 fib level. That's down there at around 75. But I'm seeing this $100 level as a very strong level of support for Solana right now. Very strong level of support down there right around 100. We are back up to 110 today. It's going to be, we need to battle back through this 118 level and then grind through the 120 all the way up to 150. A lot of volume to grind back through on the way back up at that point on Solana. That's on the daily chart. We go into get a little more detailed here on the 4-hour chart. We're still respecting this downward sloping linear regression channel that we've been in, short-term linear regression channel since the beginning of January. We are mean reverted to the downside, almost 2 standard deviations again for the third time in literally the last few weeks. Just in a couple of weeks, really, we're mean reverted to the downside again. We are at the midpoint of this descending channel that we talked about. The RSI value, let's put a number on that. RSI actually bottomed out as low as 21.46, which is the lowest RSI value that we've had since back here near the end of February. So well over a month, call it almost 6 weeks ago. We're now bottoming back out again. We do have a buy signal on the chart. The trend looks to be flipping here. So again, is it time to buy? That's up to you to decide, but we are definitely at a strong level of support right here at around 100 on Solana. Who would have thunk that we'd have been back that low again? First level we have to regain is this 118 level. And then remember I said there's a lot of volume all the way up to about 150. So we've got to grind through all that volume, break out of this downward sloping channel that we've been in, get above the 50-day moving average, which currently is right here, right around 136. And then get above the 100-day, which is 175, and the 200-day, which is 182, 183. Those are going to be the battles that we face on the way back up again. But remember, guys, risk happens fast. It comes on very quickly. We're going to go to Tesla next. Tesla on the daily chart. You can see right here, it started to turn up. We actually had our first buy signal in a long time on the Tesla daily chart. The trend did flip positive. We went up and we battled with the 200-day moving average. That was like about 2 weeks ago. Last week, we were just below the 200-day moving average, and today we turned back, or the last couple days, we turned back down away from it. We did do a almost perfect double bottom here at around 112, 115. I'll show you that on the 4-hour chart. We were considerably mean reverted, like well over 2 standard deviations to the downside on the mean reversion model, minus 1.32, well over 1 standard deviation. We were minus 1.32 standard deviations to the downside. And also on the daily chart, RSI bottomed out at 20.59. Very unusual to see it that low on the Tesla one-day chart. And so that's what we're looking at on the 1 day. This yellow line, remember I told you, is kind of the absolute bottom floor in my opinion. We hit that line in March of 2020 for COVID. We hit that line again when Elon was sleeping on the floor of Twitter, converting it to X. That was at the end of 2022, beginning of 2023. And we hit that line one other time, which was back here in April of last year, April 22nd of 2024. So will we hit it again? Who knows? The market that we're in right now is relatively soft. We do have to get back up above this 250 level, which you can see a little bit better here on the 4-hour chart. Here's the classic double bottom pattern, which one of them is right here. The other bottom is right there. So that is a classic double bottom pattern. And that level was at, 215. So we'll call that right at 215, just above the October 23rd, 2024 low that we hit. And you can see that if we look back over here, here's that low that we're talking about. So technically, if you really want to be technical about that, that's one bottom. Here's 2 and here's 3. That is actually theoretically a triple bottom pattern that we have right there. The double bottom is a little bit more accurate, I would say, maybe more reliable, where we had it happen here recently. You'll notice on my charts, I have what I'm calling a kill zone right here. I believe that Tesla is a mad value when we're below $250 a share. And we dropped back all the way back down to almost 213, 212 just yesterday. So that is the area that I'm looking to buy shares, to nibble at shares. I'm not necessarily going in with a synthetic long or a leap. If we get down here to where I have this magnet, which I think that's a stretch. Honestly, guys, I think that's a big time stretch. But if we were to get back down to there, and I believe that this will happen, it's supposed to be. I'm not sure why it's all the way over there, but technically this is supposed to be, I'm still in the drawing tool. This is supposed to be, theoretically speaking, it's supposed to be over there, right there, centered on the centered on the earnings. I don't know how it ended up over there, but that's where I foresee things happening is perhaps by earnings being centered right here in the middle if we continue in this downward sloping channel. Guys, that's a stretch. There's like a 10 to 20% chance we hit 175 on Tesla, but I do believe we retest 200. I think we see 200 at some point over the next week or two, and then we start that march back up. So significant support levels to the downside right here, right around 215. This 1023 low, or what is that at? It's at 212, excuse me. And that's the October 23rd low. Below that is 200, which is a psychological support level. And below that is this 192, 193 fib level, the 23.6% fib level. And then this yellow line, which is that long-term support. We've got to go through a lot of levels to get down to there. Do I think it's going to happen? Like I said, I'm assigning it a very, very small chance. But for me, again, anything in this yellow box that I've drawn right here, this is what I'm calling the kill zone to take possession of some more shares. We need to break above and hold 250. That's our first resistance on the way up. Then break out of this descending channel that we've been in. Let's call that around 270. We need to get back above that and stay above it. And then, of course, come up here to the 200-day moving average. It's relatively flat right now. You've noticed it's almost completely flattened out. A week ago, it was at 285, 286. Now it's at 289. So relatively speaking, it's pretty much flattened out. And then we need to get back up here and break out above the 50% fib level, which is 295, with 300 being that psychological level to regain on Tesla. So we've got a battle in front of us to get through those levels. You notice a lot of things converging right here. 200-day moving average, 50-day moving average, 50% fib level, all in one spot, literally all within $5 to $10 of each other. That's going to be considerable resistance on the way back up with Tesla. And finally, with MicroStrategy, I had this set up for like a profit-taking model. Let me go ahead and hide that for a moment. But on the daily chart, we're pretty much flat on mean reversion. Yes, slightly mean reverted to the downside, but for all intents and purposes, flat. You'll notice how much flatter this linear regression channel is, right? It's almost dead straight like that. Yes, it's slightly sloping to the downside, but not nearly as much as a lot of the other assets we looked at. You'll notice that for all intents and purposes, over the last month or so, MicroStrategy has traded directly sideways, right around this 282 level. Yes, as high as 340. Yes, as low as 240. But for really all intents and purposes, it's been trading around this mean here of about 280. That's how flat I would say that curve is. And if we look here on the MicroStrategy 4-hour chart, let me auto scale that for a moment. It's pretty evident that there is less volatility here over the last month than there was before, right? We had this giant spike up, this giant drop down, another big spike up, giant drop down. And then since then, yeah, we had a decent run up here. Just going in last Tuesday, that's what we were talking about, was how we were going to go run into resistance. And if you remember correctly, I said resistance would be strong at the 61.8% fib level at around 345. Well, we turned around, guys. If you want me to, I can zoom that in. We turned around to the penny pretty much at 345. Notice we hit it 1, 2, 3 times on that 61.8% fib level and rejected hard off of it. That level is going to be difficult to break through. Very difficult. I said our strongest support to the downside, if we came back down again last Tuesday, we would find support at the 50-day at the 50% fib level, but we might come all the way back down to the 200-day moving average. What did we find support on? First, right here on the 50-day moving average. Then at the 50% fib level. We held that really all the way out through the end of last week. And then Monday of this week went down and basically retested the 200-day moving average for the third time in a row. So hopefully you were ready. You were ready to buy, because it's a buy when we're down here on this 200-day moving average. We are bouncing off of it. That is incredibly strong support. Hopefully you took some advice and you sold a portion of your portfolio up here at 345, because I said that's going to be super strong resistance, and we're not just going to break right through it. We're going to reject off of it. And reject off of it we did. We even had a red dot on the mean reversion. It was close to 2 standard deviations above the norm. The RSI was above 70 on the RSI. You can see that right here down below. You see the red mean reversion dot right there, and MACD turned down right there on Wednesday of last week. So everything basically was telling you to sell a portion of your portfolio here, or to hedge it with a really solid cover call, let's say, at a level where you'd be okay getting your shares called away, but the premiums were really rich because of this giant move up that we had just had. So that's how you kind of incorporate everything together. And that's what I see with MicroStrategy. Right now, support is still the 200-day moving average. We need to regain this 50% fib level, this 280 that I said we've been battling with for well over a month now. Then we have the 50-day moving average up here at, call it roughly 305. There's a $300 psychological level, 305 for the 50-day moving average. Then we've got to regain and break outside of this channel that we've been in, which is at 330, and the 100-day, which is at 335. And finally, break through the 61.8% fib level at 345, which we are not going to do in just one fell swoop. We have already rejected off it once. I suspect we reject off of it multiple times before finally breaking out. All right, guys, so I hope you found mad value in today's TA Tuesday. You'll note that I'm starting to go into a little bit more depth. I'm showing you what you would learn when you take that TradingView or technical analysis course with me. I also do a course on understanding options. Make sure you like this video. Comment, what'd you like best? What could I do better? What did you learn today? And make sure you're subscribed so you see every single one of them that I do and others like me do. Go to my website at GDinero Coaching, book a course with me, book an individual appointment with me. And remember, here's to you increasing your financial literacy so that you and your family can be on that path to financial freedom. Here's to the Gators winning the national championship, and we will see you next time.